Next, we get the pleasure from hearing from Michael Busch, who is the president and CEO of Chicago-based Burling Bank and Burling Ventures, a wholly owned subsidiaries of Burlington Bank Corp. Michael has more than 25 years of banking experience focused in areas of regulatory compliance, risk management, operations, marketing, client services, and business development. And so now we're going to get Michael's feedback on how, in the context of his bank, which cannot be any more different from the Amish bank that we heard from yesterday in terms of location, we're going to get his feedback on your thoughts on what the research is and how that works into your day-to-day business.
Thank you, Tracy, and congratulations to the authors and all the authors in the room. Put a lot of work into this, and it's much appreciated, and certainly to the Federal Reserve and CSBS and FDIC for having me. As a Chicago Cubs fan, I was hoping to extend my stay for a playoff game, but that's just not in the cards this year. Also wasn't fun seeing the St. Louis Blues are going to probably receive their rings this evening. So for the Blackhawks fans, I'm sure you're sharing their pain. Yeah. But pleasure to be with you here. You know, I'm happy to contribute my perspective as a community bank president. I am not a technologist. I sit at that in the nexus right now of what's the next step for us in adapting technology and in following through on our mission, which is to remain relevant to our clients and specific to our clients. As Tracy mentioned, you know, our bank is very different than Bird in Hand. The closest the Amish get to Burling Bank is probably a few bake sales at the train station. And yet our mission is the same, which is to serve our clients with distinction and provide them with the banking products that are relevant to their lives. Quick background on Burling Bank. We're 30 years old. We have a single location in Chicago, Illinois, state chartered non-member bank with the FDIC as our primary regulator. Only 18 full-time employees. 140 million in assets and 100 million in loans. This is our bank, but not all of it. We are on LaSalle Street, next door neighbors to the Chicago Federal Reserve, so close that they can probably hear our conversations. We're on the first floor of the Board of Trade building. And so this also goes into a little bit, which I'll touch on later, is what is a community bank and how will we define community going forward. So for Burling Bank, even though our MSA is all of Cook County, it was really a vertical community, a neighborhood that was based around a common industry, which is the trading community. Some of you who have been to the Board of Trade may recognize this is the grain room, the corn pit specifically. I worked in that pit for 20 years, 15 years of it really good. The last 5 years, we went, through the transition of a massive technology disruption with algorithmic trading. And so both as a former trader, I've seen that up close and what it meant for my own profession. And then as a banker also, this is on the 4th floor of the Board of Trade, and we were on the 1st and 2nd floor of the bank. So kind of go up and down for the open and close of the grain markets, what that meant for our community base. And while to an outsider, that looks like mass chaos, and I would call it managed chaos, that frenzy of activity was how futures contracts got consummated. When I look at that picture, though, I see individuals who had exchange membership loans through Burling Bank, one of 3 banks in Chicago that did exchange membership loans, mortgages, lines of credit, college tuitions that need to get paid, large, low-cost sticky deposits. Traders would like to park their money in savings accounts. They took enough risk on the floor. They wanted to know it was sitting there. And so there was a massive disruption to us when today's trading floor looks like this, which is one individual eating his lunch at a desk, trading multiple markets on a global basis. And that is progress, and it is more efficient, but it's still very disruptive to a certain community. And so it forced us to look at technology in a different way, and also maybe to be a little bit more proactive as to how can we take some of our unique attributes in our physical location, our relationship with our regulators, and our client needs, and be at least entering the conversation a little bit more of what is the future of banking, how do we connect with our clients, how do we find each other because we're not in a rural community where we may be the only option or maybe one of two options. On LaSalle Street, there's every big bank flag flying that you can imagine, and we are certainly the David amongst all the Goliaths. So just want to touch on some themes, and this is my last slide, so don't expect any more. I don't have coefficients, regression analysis, or anything like that. But just want to touch on some themes that I think are relevant. As President Harker mentioned, this is kind of the negative of going on the second day. Many of these things have been touched on. But I want to lend my perspective from a community bank president on maybe how we're addressing them, and some things that together we can do to move it forward. Definitely seen in the last 5 years it go from competition to collaboration where everybody was going to come in and disrupt us. There's now a desire, both in some evidence and I think anecdotal conversations, where some of these fintech firms, and some of them brand names, want to partner with a community bank. If they're going to buy a bank, if they're going to purchase a bank or make a strategic investment, one could argue that a smaller bank, and there are definite, I guess, variations on asset size and how you define that. You know, we're 140 million. We can consider ourselves small. $1 billion bank feels big to us. $10 billion feels like they're in a different world. But from an acquisition standpoint, you would probably want something that's bite-sized. And you would also want a collaborative, nimble management structure that you're able to get that feedback through. From a regulatory standpoint, I think small banks make good partners because they know that those bank presidents and that management team have their arms wrapped around the risk in that bank and what that bank's focus is and what it does. And so it lends itself, I think, to potentially a better universe for trying to move this fintech and banking partnership forward together. Not all small banks are set up for that. Not all small banks need to do that. And that collaboration can take many forms, which I'll come to later. One of the obvious difficulties is that the pace of innovation and the pace of regulation are moving at two different speeds. And the community bank presidents are stuck in the middle. We have a lot on our plates respectively, and yet we're supposed to be part technologists. I think it was Julianne mentioned it last night that we've done a good job on the risk management part that came out of the crisis. And so we collectively need to give all of ourselves some permissioning to embrace innovation and figure out what does that mean for our bank and how can we help the system together move that forward. There's a difference between saying, and I loved what I heard, particularly from Chairman McWilliams yesterday, with every part of her speech, and I was really encouraged at what's coming out of the statements from many of our leaders in the system. Doing is another thing, and so how does that translate through your regulatory bodies, both at the state and federal level, and from the fintech partners and from the banks? So that will be a challenge for us going forward. But as Chairman McWilliams mentioned, that framework of how we regulate banks needs to involve and encompass technology and provide us the ability to have a safe space. It doesn't mean we need to move away from safe and sound practices. It's just for the right relationships and the right banks to innovate a little bit. Core data processors has been mentioned a couple times. They have a strong ability to help or hinder us going forward. Most banks will get their technology from the core providers. They will not be incubating ideas. And from a vendor management standpoint, it's difficult to know which fintechs to partner with and which ones have staying power. Are they what we jokingly call two dudes on a laptop, which, no offense, it's where a lot of great ideas come from the dorm rooms. That we know all those stories, but that doesn't work in banking. We have to prove out from a vendor management and security standpoint that they're here to stay. Who wants to introduce a product that vendor might not be around in a year? That's not going to work for our clients. Community formation, talked about that a little bit previously with this idea of what is a community bank in the future. Is it a geography, which so much of our regulation and especially CRA is based upon, and for good reason? The charge of a community bank is to serve its community, and that's currently defined mostly as geography. But in the future, is it shared interests? Is it an industry that people are coalescing around? What banks are the right ones to service that? What permission, again, can they get from the regulators to do that? That's, I think, an emerging area. I think that'll be particularly something that we need to concern ourselves with a younger generation that moves around a lot. They're finding each other on social networking based on shared ideas, shared stories, and what they care about. Having said that, there's an opportunity, I think, for technology to bring about, in a good way, hyperlocal community banking, because you're able to use technology to identify those people, to reach out to them. And we, especially the community bankers, need to do a better job of telling the story of why a small bank, either located in a rural area like Bird and Hand or in an urban area like Burling Bank, is a better partner for them. We need to have the technology that allows them to interact with the bank in the way they want to, but also tell the bank local story. Not unlike craft beer, craft spirits, farm to table, it's the same messaging. But you have to provide the technology so they can interact with you in the way that they want to. IT versus digital strategy, I look at this as kind of plumbing versus compelling products. IT, we go through those exams. Quite honestly, it's kind of scary when you think about all, the different entry points and what can happen with cybersecurity. That is done by a different group than the digital strategy. As far as product outreach, how do we interact with our clients? What's compelling? So for my thoughts, they are much less about IT today and more about digital strategy. We're at that nexus of figuring out what's the next move for Burling Bank, and what digital strategy works out well for us. And there's several ways to do that. And we want to be, our ambition is to be a fintech forward, future ready bank. Sounds great. What does that mean? So fintech forward in that we are actively engaging in conversation with thought leaders in that area, engaging our regulators on what we want to do, to be very overt and explain to them on why we're doing it, and how that will benefit our clients that exist today and the clients we want to get tomorrow. To analyze your core and what capabilities they say they have, and and how quickly that can get delivered to you, how expensive it is, and how easily you can integrate that into your bank. Another option is to incubate some ideas. Could you have some entrepreneurs in residence that use the bank as a lab and probably get to market quicker with a better product? That might be appropriate for some banks, that might not be some others. I know that some in the audience are doing a great job of that. Not many banks are doing that. It may not be appropriate for everybody. But that's something, especially given our unique bank attributes, that we're looking into. There's a pretty vibrant fintech scene in Chicago. The regulators are used to technology advancements in Chicago with the futures and options capital of the world. So that's kind of a natural with all the colleges and the experienced human capital in Chicago. May not be as appropriate for a rural bank. So how will we gain that technology? And then from, I think, a systems and approach standpoint, that we're future ready and malleable enough that with the change that's coming in banking, and we're seeing this, we're trying to evaluate this in real time, which is difficult. It's difficult for the authors because some of the information is dated, and it's difficult for the bankers that you're trying to kind of be all things to all people right now. We have aging clients that want to come in and talk to Mary Beth and make sure that everything is taken care of. And then we have new clients that may never come into the bank. But they still may want to know at the end of the day when they run into the problem, and they will run into a problem, that they can pick up the phone and talk to the bank president or chairman and have them work through that problem. Also, as they age and have kids and maybe get married and have a professional career, their needs will change. Right now, they might be pretty basic. And so some of those solutions that are out there in the fintech world are appropriate for them. But later on, they may need some advice, some guidance, and that's where a community bank that is willing to take the time to have that conversation and hold their hand as much as they need it held through that process. I think that it's a relevant value add for them. But the challenge for us as we go through this in partners is community banks need strong, capable, willing partners, both in fintech, from the cores, and also from the regulators. That has to be a larger community that's doing it together in order to move this ball forward. Again, to each his own. For each bank, they're perfectly capable of determining what is best for their community that they serve. But the challenge, I think, for all of us is that there's an acknowledgement that community banks are a strong and vital part of the banking fabric of the U.S. system. How do we help them remain relevant from a regulatory standpoint and alleviate some of that pressure that we feel and allow us to kind of innovate without, I guess, the fear that we would do something wrong. We don't go into any decision trying to do something wrong. We're trying to do it right. But how do we use those resources to make sure we're on the right path? Thank you.